Welcome back. It's time now for On the Radar, where we ask an investing professional what they're looking at in today's markets. We're back again with Greg Taylor. He's Chief Investment Officer at Purpose Investments. To talk about commodities, Greg, we'll hit you up on another one of your areas of expertise. We've seen stock markets rally pretty substantially this early year, but we haven't seen a lot of upward momentum in the commodities.
Yeah, so all year-to-date performance has really been led by tech and the sectors that didn't do well the last 12 months. And I think that's probably a bit of an opportunity here, that I don't think people should be chasing the NASDAQ and some of these speculative tech stocks that have really led the charge. And I think you want to look at some sectors that have lagged, and one of those is the commodity sector. And I still think this is going to be the sector that does well over the year and setting up for a multi-year growth pattern. The big story at the end of the day for 2023 is the reopening of the global economy, and in particular China. And as China reopens, you're going to see a lot more demand for commodities. And the simple thing is there's just not a lot of supply out there. After a number of years, we haven't seen new mines being built. We're not seeing new supply come on for copper and nickel and energy, and that's still set up an opportunity. So while the year started with a bang and tech really flying, I think this is not a time to chase tech. It's time to look at some of these other sectors, and we still remain really positive on the real assets and think this could be a good opportunity here.
We have seen a rally in copper recently. It's moved from about as low as 325, I think, in the fall to about 420 now. Do you subscribe to the theory that copper can be a leading indicator for the commodities?
Yeah, it's hard to knock Dr. Copper, and Dr. Copper is showing that the world economy is getting better. And when the world economy is getting better and Europe seems to have weathered the storm, winter wasn't as bad, their economy is doing well, and we're seeing that stock market fly in Europe. And in Asia is starting to grow again. So the global economy seems to be doing well. North America, we've got this debate whether we're going to have a recession in the second half of the year or not. But regardless of that, it feels like global demand is starting to pick up again. And with that, copper should go. So if you hear any more headlines on recession fears and copper dips, that could be a great buying opportunity, because we are again setting up for a multi-year growth pattern, and there's just not a lot of supply out there.
So what would you buy on that dip? Shares of publicly traded base metal miners?
Yeah, I think you can almost look across the board. Certainly, we've seen a good attention in some of the copper names, but it's hard to get a good pure play name. We've got the First Quantum problems and geopolitical risks, so you need to make sure you're looking at the right companies. Tech might be one of the best companies out there with more Canadian operations.
Tech resources.
Correct. But I think across the board, the commodities are looking quite good here. So you can look at uranium names. I think there's some good news from Cameco this morning, and uranium could be doing well. Copper looks good, and nickel looks like another area that unfortunately we gave away a lot of it to Sudbury to international players in the last cycle, but there's still opportunity with nickel. And when you look at the excitement around electrification of cars and EVs, these companies and batteries need nickel and need copper, and Canada is set up well for this. You're
referring to Inco and Falconbridge, which are now long gone from Canadian markets.
Exactly.
A lot of us regret that departure. Where do investors get nickel exposure? Canadian investors?
It's hard to. Like right now, Vale in Brazil and Glencore are some of the best ways to do it. Sherritt had some exposure, but is so diluted with some of the Cuban potential. So there's some juniors coming up right now, so it's time to do some work on some of the junior names. But nickel would be nice, and if we can ever get the Ring of Fire built, that could be another opportunity that's good for Canada and Ontario and Northern Ontario in particular.
You mentioned First Quantum. That company is in a real mess in Panama with respect to its big mine there, and the kind of dispute that flares up not infrequently between miners and the governments hosting those miners over royalties. What's your take on the First Quantum situation?
Well, it's too soon to tell, and certainly that's one of the biggest risks when you deal with commodity companies is you have to look at the politics and look at the governments involved and look at the deals that have been struck, and we're seeing that firsthand in real time with First Quantum and the Panama government. And it seems like it was getting close to being resolved, and now it seems like they've fallen apart in negotiations again. So it's probably something that will be resolved at the end of the day, and at the end, and that will be good for First Quantum and also Franco-Nevada, which has the big royalty on that mine. But geopolitical risk is something that everyone has to be aware of, and you've got to pick which countries you want to operate in.
Why don't we finish with oil? What kind of year for crude oil do you see? We're trading now, as we showed viewers at the top of the program, just below 78 US dollars per barrel.
Yeah, oil's been probably a disappointing one to start the year. The companies have really pulled back, and in particular, the natural gas suppliers in Canada have really been under pressure for, again, because it's been a warmer winter, and we're not seeing a lot of demand come up. So storage is getting pretty full. But this again is a good opportunity because we aren't really seeing a lot of supply come on. The Russian sanctions don't look to be lifted at any point in time in the near future, and I don't think the dealings with OPEC are getting any healthier. So there's still not a lot of supply out there, and demand again picking up is good for commodities. So I think energy stocks are still going to be fine by the end of the year.
Greg, thank you.